All right, let's go ahead and start the daily review. We had a big sell-off at the start of the day. And if you want to see how I traded that open, then check out the most recent video. And I showed my trades there in that video. 6 bars down with increasing size. So it was getting a bit parabolic here. And especially on the open where reversals are so common, I expected that this would get more follow through, but immediately there's probably going to be a pause somewhere around here because this was getting parabolic. Now, I think bigger picture, big sell off, we're looking for follow through. This could be the follow through. More likely it's a delayed response, and then something like this over here is that follow through. And I was expecting there to be a little bit more selling here around the end of the day, and there still could be. There still could be a pretty large move in the last few minutes down. But on the open, I have marked look for trades on lower time frame. So like in the video I posted earlier, I was doing the 2000 tick chart, and when I really start to see strong trending moves, I like to go to the 2000 tick chart and look for swing trades on the tick chart. So I could mark trades here, but basically, I mean, really any of these bars here could be marked as a short, given the context of the prior day of a big sell-off. So Friday, big sell-off, probably getting some sort of follow-through selling today, and we got that on the open. It's interesting that we found support today at the 6,000 number. So 6,000, that's an important number. It's probably going to be an important number for the next few years, realistically. Let's say even if we go up to 7 or 8,000. Well, at 8,000, 25% pullback would be to 6,000. So we're probably not going to leave, that 6,000 is going to be important for several years to come. So, and it was just interesting today, double bottomed right at the support. And those big round numbers, it's a kind of a curious thing because it really doesn't mean anything, right? There's nothing inherently special about that number, but traders respond to it. So 6,000, 5,000, 5,500, any number that's ending in a 0 or that last number is significant, like a 5, then that could be considered as support and resistance. And the bigger the number, like 6,000, then the more important it is. So today we double bottomed at that number. Even though we've had lots of selling pressure, I do have a buy marked here. It's marked as a buy because, for one, we did double bottom at support down here, and now we've gotten a close above the moving average. And then we have a second close above the moving average. So we have follow through buying, and this bar is closing near its high. So I thought that would be okay for a buy above that. We also have gaps as the market's rallying here. We have a gap right there. And after 6 bars up like this, there's probably going to be at least a little bit more up. So either we break out above this high here and try to test the 50% pullback. Let me draw that in here. So the 50% pullback of this opening range is right here. And so if we're buying right here, there's still room to get a scalp before you get to that resistance level. So after 6 bars up, even if there's a pullback, there's probably going to be a little bit more up, and then we still have room to the resistance. So I thought it was okay to be buying there. The next trade I have marked is going to be a swing trade. So I have a short here. Looking at it, we kind of have a series of double tops here. So kind of call it whatever you want, triple top. Either way, we're getting lower highs from this high here. And given the premise that we were going to have more selling at some point, this could be the start of that selling. So we've been above the moving average for a while, break out below it, close below the moving average, breaks above the moving average, and then pulls back below it. And there's a little bit of a tail and bottom but it's closing below its midpoint. I think that's an okay short. It's probably not a high enough probability to go for a scalp, but I think this is a very good spot for a swing trade. It just seems to make a lot of sense. Bulls are starting to struggle to go higher. The bigger picture is bearish. Bears are looking for a good place to go short. And I think, your risk isn't too big there, about 10 points. And where do the bears want to go? They want to test down here again, the lows of the day, 6,000. So I think that's a reasonable place to go for a swing short. The next few trades, same story, where I think they're okay for a swing short. I think these are a little bit higher probability, so you could probably scalp these as well. These would be better for scalping, but you can also swing trade these. So looking at this one, for example, minimum go for 2 times your risk, then you'd be out right there. And a lot of this is just the type of market that we're in, where sell-offs will have follow-through, which is different from the last few weeks. So I might have avoided marking some of these trades like this in the past few weeks because sell-offs were just being bought. You get a few bars below the moving average, and then it was being bought. Now we're kind of in a different type of market, and that's something really important, is to be able to adjust and recognize the kind of market you're in. And the market we're in now is that these kind of sells are working again. So that's something to keep in mind. Looking at the daily chart, Friday, big sell-off. Today is going to close as a bear bar, so that's good for the bears. And even if there's not more down tomorrow, probably next week, the rest of this week, or going into next week, we're going to get lower prices, is what I would expect. The first level would be this low here, 59.50, and then lower would be 200 moving average and this trend line we have here. Could be kind of like this. We had this big sell-off, and then the next day was another bear bar, although it closed around the close of that day. And we did get 4 bars up, but then that ended up selling off, and we did end up getting follow-through selling. So I would expect something like that from here. Is it going to break out below this level and head down lower to 5,500 or 5,000? I don't know. I wouldn't expect that, but I am expecting at least a little bit more down. Another way to look at this is there's a trend line coming up through here on the daily chart. Trend line is going to be something like that. Trend line break, and then a retest of the highs that we have here. And notice these highs are lower. This is the double top, lower than this high here. So we have a break of the trend line, test of the high, a lower high, so it's a lower high double top, and that's a setup for a major trend reversal. So not only do I think bears would want to be looking over the next couple of weeks to get short, I think bigger picture, the chances do go up that we will have more down, and I don't think bulls will be as strong for a while. Bulls will have to really prove themselves again, because why did they let this trend line here be broken? And why have we've gone sideways so much here? Why has it been sideways this entire year? We're actually, the year's gone fast. It's hard to believe, but we're 2 months into the year now, and we're no higher than where we started. So the point I'm getting at, it's the market is looking better for the bears, and the bull case is not as strong over the next few weeks, I would say. That's how I'd put that. All right, guys, if you have any questions, let me know in the comments. I'll be happy to answer. See you next time.